Hello everyone. So we just sent the link out. So we are waiting for a few minutes for everyone to join. For those who just join us here, how are you guys doing today? Yeah, I see more people joining, which is fantastic. So did you guys have a good weekend? Did you get some good rest? Yep. Some Steph said hi, Theo. Nice to see you. Nice to see you, Steph. iPhone user said yes. iPhone said yes, yes. Okay, perfect. iPhone said, but I lost my last week of my money. Vincent, yes. Okay, guys, honestly, last Sunday here we gave so many setups, and I hope that the reason some of you are leaving the webinar before we talk about all the setups, it's because you are busy and you have something else to do. But trust me, all the time, and I told you from the beginning, the major currency pairs are not the pairs that always they are trending, always they have the best setups. Don't get in the code of that illusion. Let's say the brokers they used to sell out, and all the gurus and all this stuff that, yeah, because the euro and the US dollars and then the Great British pound, they have the highest amount of liquidity and they are the most tradable assets. It means we have to trade them because the spreads are low. That's not all the case. You need to know the markets. You need to know how the market works. You need to know how the currencies are traded. So when we conduct this analysis and we go through the weekly charts, and now I'm just making an introduction, all right? We go through the weekly charts and then we go to the 4-hour to execute the trades. And I give you the trading plans to follow. Almost every single week, there are lucrative trades. Okay, so, and not all the time they are on the major pairs. At least the last 1 month, most of the best setups, they were on the minor pairs and on the cross. So just be patient, stay until the end of the webinar. And this webinar is just for you. It's not for myself or for somebody else, okay? iPhone said, first time I saw you in a meeting, good, now I can trust you. Thank you. Nina said, greetings from Macedonia. Fantastic. Guys, if you want to let me know where are you watching us from, that will be great. But let me get started. So myself and the Elevating Forex team would like to welcome you on this Sunday webinar. And just to make sure that everyone understands, this content is not intended to provide trading or investment advice or personal recommendation. It's used for general information and for education purposes only. Vincent, hello from Dubai. Raj, hello from Germany. Mohammed, hello from Bangladesh. Albert from New Zealand. Vlad said, UK here. Eager to invest. Perfect. iPhone said hello from Belgium. Mario said from Cyprus. Maybe we are neighbors. From which city are you watching us, Marios? I'm also in Cyprus. Vlado said hello from Macedonia. Rocky from Malta. iPhone De Ahmed from Spain. Perfect. Archie from Germany. Mario from Nicosia. Oh, nice. from the capital, Alway from London, Vogo from Slovenia, Deo, Malaysia here, 2 a.m. and still learning. Wow, perfect, congratulations. Agrippina from Macedonia, nice. So, guys, for those who see me for first time here, allow me to introduce myself. For those who see me for 100, I don't know how many times here, I know it's going to be a little bit of boring, but it is what it is. So I'm a certified financial technical analyst, and I hold certificates from the Society of Technical Analysis in the UK and from the whole International Federation of Technical Analysts. I have more than 10 years experience in trading. I specialize in currency trading and indices, of course. I will better address it as the CFD trading. When it comes to currency correlation, it's where my expertise is most valuable to traders and investors, because we combine, currency pairs, they trade as pairs. Yeah, there are two currencies involved. So we need to know both sides to make better informed decisions. On a daily basis, besides trading, I conduct market analysis for different purposes, hedge funds, trading firms, individual investors. I create educational courses for trading, for investing. I publish articles in financial magazines, and I host events with Steve Ninson, John Bollinger, and many, many other well-known traders and investors in the world. So let's share the next screen, or we bring this up. Yep, guys, can you please confirm that you see the TradingView platform, please? Yes, yes, yes. Okay, perfect. So I will start with the majors. By the end of the webinar, I will go through the minors, the crosses, to show some setups, to show what happened last week and what we expect to happen this week. Okay, but first we start with the majors, with the gold. Obviously, if you want, we can go through the Bitcoin because it looks like a bit opportunistic as well. Theo, start with gold, please. Steph, please allow me to keep the order that I keep for the webinar. Thank you so much for mentioning. So we're going to start with the euro. And for those who cannot stay until the end, perhaps, and you need to go, you can watch the webinar after on the YouTube channel here at Elevating Forex. So last week we had this formation here, and we said as it's an inside candle, we might gonna see some push to the upside, and that happened. Although I wasn't that positive or optimist about the euro long. I was more likely to find some resistance here and then decline, but because I was more optimist on the US dollar based on the non-farm payrolls and based on the FOMC minute that posted last week, last Wednesday. So what do we expect this week to happen? Well, based on the bullish candle here on the weekly chart, we expect the price to continue moving upwards, guys, until that resistance there. Now, when I go on the weekly chart and I do this analysis on the weekly chart, and here is how you can trade. Okay, pay attention to that. We go on the weekly chart and we identify some kind of market structure. We can identify the direction of the market, the overall direction of the market. And then we use the time frame correlation to go down to a lower time frame, and that's the 4-hour chart or the 1-hour chart. And then we look for specific entry criteria that's primarily involved a level of support and resistance and a reversal price action pattern to take the trade. But before that, we were on the weekly time frame to identify the direction. So we need 2 time frames in order to place a trade. We need a higher time frame to provide us with the direction, and we need a lower time frame to provide us with the specific price action setup at a specific level to take the trade. Okay, I hope that makes sense. Even if you are a beginner trader or experienced trader, doesn't make any difference. It's the same thing. And trust me, I trade for 12 years actually. Okay, guys, I see traders, they trade for 5, for 6, for 7 years, and they come to sit on private coaching one-to-one with me, and because they are still lost, they don't know what they are doing. Today they do one thing, tomorrow they do another thing. Guys, please, if you want to learn how to trade manually, beside the setups that our traders they send on a daily basis on the premium group primarily, please, you can follow this simple strategy. I use it for 12 years now. I mean, you go on the weekly chart, and regardless how busy you are or not during the day, you go on the 4-hour chart and take trade. I mean, there are traders here, they take on these setups and they have better results than other guys that they pretend I know everything and I go to the 1-minute chart and take. I mean, just keep trading simple. I think in trading, we want to make money. We don't need to prove that we know something. Okay, so keep that very simple. On the 4-hour time frame, the price now, it starts trading with a series of higher highs and higher lows. Okay, so the next area of resistance is here. What we can wait for is for the price either to move a little bit upward, to decline somehow. Maybe you are using some moving averages, I don't know. Maybe you are using just price action. So here it's a level of support. Here it's another level of support. And you can wait for the price to come here, put a reversal price action and go long and target this level here. Okay, I hope that makes sense. Let's continue with the Great British Pound and the US dollar. Similar. On the weekly chart, the price ended as a bullish engulfing, which is a very strong reversal pattern. The bullish close here, so the next area of resistance is up there. So we are still looking for shorts until the price reaches this level here. What is going on the 4-hour chart is that the price just went straight with this line. So I see a level of support down here. That's what we call inside support. And if the price on Monday declines a little bit, or on Tuesday declines a little bit before it reaches this level and it comes all the way here, maybe we're gonna see a reversal price action setup like a bullish hammer or a bullish engulfing. We can take a long trade and go all the way to this level here. So that's another trading plan. On both euro and pound, we are still bullish for next week. USD, Japanese yen, this one is very interesting. Look at this. On the weekly chart, the price created this reversal doji candle. So, and that's actually the the gravestone reversal, okay, per candlestick terminologies. So we expect that from Monday onwards, the price will decline a little bit on the weekly chart because of this weekly reversal. So are we taking trades on the weekly chart? No, we're going to the 4-hour or 1-hour time frame, and we want to see the price to behave as a downtrend, like it start doing here. Now, the price now is not in an official downtrend because still maintains this lower high. And okay, we want to see the price to break below the 160.27, and then we will say that, okay, now it's a confirmed beginning of the downtrend. If that's going to happen and the price won't find some kind of support and bounce off and move upwards, but it's going to penetrate this level here, we want to see, we're going to let the price to continue a little bit. We won't chase the price. Okay, we don't need to get panic and say, oh my God, I missed out the trade and I had to short from here. To go short, it means to sell from here. We're going to wait for the level to break, and at some point we will see green candles. When we see green candles, we will be ready around this area here to find a black reversal candle, and then we're going to go short. Short means we are selling the market for those who are in trading, and when I say long, it means we are buying the market. We are intending to buy the market. Okay, so we have this scenario on the USD JPY, Australian dollar, US dollar. This is a bit interesting because the Australian dollar broke above a strong area of resistance, and the market now it can use this one as a potential support. So there is too much room on the weekly chart until the price will reach the next area of resistance. How can we use it? Well, we go down to the 4-hour time frame on Monday and Tuesday and so on. We zoom out a little bit just to see the space. We can zoom in again. And what we want to, how we want to trade this one, the price now, it made this higher high. So at some point, I believe that the market will retrace, and maybe it won't stop right here, but it's going to come all the way to 0.67 something, okay? And it's going to come somewhere there. So you can mark this on your chart. It's about 0.6690. And if the price will come here using Fibonacci, it's about 61.8%. So if the price managed to come all the way here with, in order for the price to travel all the way down, we will see black candles. Don't scare and think that the market is in a downtrend. I noticed that many of you guys are, you are thinking that when you see black candles, you believe that the market is in a downtrend. But in fact, the market, it's in an uptrend, and the black candles, it's a part of the uptrend. The price has to move downwards before it moves upwards. Think it more like a spring. Kenneth asks, what's the name of the tool are you using now? Do you mean the one with purple color? Kenneth, if that's the Fibonacci retracement tool. You can access it from the left side here. If you are asking about the drawing tool, it's the zoom annotation tool. So that's the plan. We want to go long. It means we want to buy, but from where? And I personally want to buy from an area of support because there is a high possibility that accumulation of buying orders will be executed at an area of support. Where is the most recent area of support? It's somewhere down here. And there are some confluence levels like the Fibonacci retracement, let's say. For more advanced trader, that's the fair value price or fair value gap. And actually, I'm going to host some webinars, some series of webinars about smart money concept for a prop firm. If you guys want to participate, to watch them anyway. And yeah, it's this area here. It has a lot of potential to hold the price and create some bounce to the price in case it's going to move downwards. Okay. Zeb Ali asks, is there any way that these live sessions are getting collected? I have recently joined and I was eager to see in my time zone. Guys, recently I started going live on Zoom, on the YouTube channel at Elevating Forex. So they are available on the channel. Yeah, so just find Elevating Forex on YouTube and you can watch them there. Can you please talk about the gold market? I have a big amount of money invested in that and I need to know if it's going up or down. Look, I cannot tell you if it's going to go up or down, but I'm going to do the analysis as I provide it to hedge funds and prop firms, and it's the same thing. Okay, so I cannot tell you, friend, sorry, if it's going to go up or down. I'll do my best. Steph asks, which prop firm would you recommend? Look, depends where you're living. If you live in Europe, I personally found the Trading Pit to be one of the most transparent so far. Yeah, so okay, UK, Europe, It's okay, as long as you're not in Canada or in USA, because not all prop firms, they provide services there. So let's continue with, guys, if you need to ask any questions like this that they are not relevant with market analysis, you can also send message at support and Geert can direct them to me, or you can message me directly on Telegram with Theo Theodorou. You can find me as you see my name on the chat here, Theo Theodorou. Whatever is more easier for you. So let's continue, guys, with the USD Swissie. Now, on the weekly chart, the price found last week some resistance around the moving average, and it printed this shooting star reversal. So this leads us to, let's better try to go short. It means to sell on the 4-hour chart next week. So how do we do that? What's the best way to do it? So far, on the 4-hour time frame, the price made these lower highs and lower lows. Now, we see black candles. At some point, maybe on Monday, maybe on Tuesday, the market will move a little bit lower or not, and some green candles will appear. So I will be waiting to see these green candles somewhere around this area, somewhere around 0.90000. At this point here, you can mark this on your chart. It's a high probability area of resistance. If the price will come here after a series of green candles and we will see a reversal price action. When I say reversal price action, I mean two things: bearish engulfing to go short, or a long upper wick to go short, and we can sell trades from here. Next one, let's check which one? Okay, let's check the gold. Everyone is waiting for this gold, my goodness, tonight. But guys, trust me, the trading opportunities, the hot trading opportunities, they're going to be a bit later. Okay, so just be patient. Now, what do we see here? The price of the gold. Peter, how are you doing? Nice to see you too, friend. So, here is the resistance. The price is breaking above the resistance. Here it's another resistance. So, this market it looks like, is moving upwards, right, on the weekly chart. Last week, we mentioned that there are a lot of doji candles around this area, but it's most prominent that this market can move upwards. Why? Because we have a kind of rejection of the weekly moving average. The price moved upwards. It's sitting around just below the 2400. Now, it's a strong area of resistance, but this market is in an uptrend. I don't know what's going to happen tomorrow or after tomorrow, but I know for sure that a market that is in an uptrend, unless it finds an equal or bigger force to force the price to the opposite direction, it's going to continue its upward move. So for me, I see this as bullish without saying this is going to happen, but that's what I see based on the technical analysis. And I'm focusing now on this last upward move, and I see a few things. I see an area of strong support down here, which it's a cluster of supporting factors. If the price declines a little bit and comes to this level here, strong area of support. And if I see a price action like a bullish engulfing, a combination of these two candles, or a long lower wick candle, then I will take the trade to buy. This is what I'm expecting. Here, Wilson said, and Igles, so, sorry, I don't understand. Any analysis? I have a trade open on this weird pair, CUC USD. Zeba, what is this currency pair? Sorry, friend, I haven't You can tell me about Mexican pesos and Norway in Corona, but I haven't traded that one. I don't even understand what does which country's currency represent. So this is for the gold, guys. It's not that it's in a strong trend. Okay. The copper. Oh, okay. Come on. Okay. So what I want to point out on the gold is that the market is sideways here. It's not in a strong trend. So if you have a short, if you do kind of martingale or you do back to the mean reversion strategies, and you are going short at somewhere here, the market it might gonna reverse to, and you can use it to get out of the trade. But it looks like that at this point the market is creating a push to the upside. Masfit said, am I trading order blocks and fair value gaps? Of course I trade them. I don't trade order blocks as order blocks or fair value gaps as fair value gaps. I use this, and again, that's a very, very wrong, misleading information that is on YouTube that I'm very well aware of. This, primarily, it's good to be used to validate trading setups, guys, not to trade them as a standalone things. We trade something at an area, we buy something, we place a buy order at an area of support, and we try to use some factors of confluence at that area of support to add more weight on the trade. Okay, that's where the fair value price or the order blocks, they come, and all this stuff. And then the techniques, we place a buy limit order here and that, and this and that. The market dynamics, the market moves are not based neither on order blocks or neither on fair value gaps or any other kind of price action setup that it calls differently. Okay, it's primarily based on volume, on which time the trading activity took place. There are so many different and difficult things that they cause the markets to move. I'm trying to be very simple in this explanation, but try to use the order blocks and the fair value gap, fair value prices to validate some trade. Somebody can tell me now that, hey, Theo, this one here is the order block. Okay, sorry, it's a fair value price, fair value gap, and I'm going to use the 50%. Here, I'm going to place a buy limit order, and I'm going to put a stop loss down there, a stop loss down there, a stop loss down there. You can put it wherever you want, okay? That's not a problem. But the price, in what terms it's going to come to test this level? Is it going to come after the uptrend becomes a downtrend? And if there is a broke of a trend line, then it's going to be a new downtrend in the market, and you're going to buy the downtrend. You have to understand everything that comes with trading in isolation, any kind of ITC or smart money concept and all this stuff. So pound cut, okay, we will see that. I have a 21 BMED said I have a sell trade at 23.24 on the gold, 23.24, and it's still open. 23.24, guys. If you're trying to do mean reversion and martingale strategies better, you come to me to sit down and I will explain you to the letter how to do it. So you always going to be beneficial by that, okay? And look, if you are leveraging your account with this trade here, and you are still in that trade, first, I cannot tell you or I cannot advise you, especially on open webinars, what to do and how to do it. But I'm just saying what I see in the market. I see that one market now, it's in an uptrend. I see it has a bullish sentiment. RSI, it's overbought. Stochastic, it's also overbought. And if the market, I'm not going to tell you to keep the trade or not, because tomorrow maybe the price will decline and it's going to go here. Maybe it's going to go up and it's going to come down. I don't know what's going to happen, but that's what I see at the current moment. Okay. So let's continue. Now things are going to get very, very interesting. Ladies, gentlemen, boys, girls, everyone, everybody. So last week, can you tell me who was on the webinar last week when we analyzed for second week in a row the Euro Great British Pound? Peter said me, I'm going to just grab a sip of coffee, waiting for you to tell me who was on the webinar. Come on, don't be scared to say me. Yes. Okay, guys. Now, look, when I ask you this kind of questions, it's just sometimes they are uncomfortable, because when we say something and we don't do it, it just looks like a bit weird, but no, it's in a very nice, friendly way. Okay, so many people, they say now me. Someone says I wasn't, but how was your analysis? Was that right? Somebody says I didn't. Okay, guys, look. If you were or not, I mean, it's totally fine. It's just look at this. On the weekly chart, we point out few reasons. The market, it's in a downtrend. And it happens, okay? It's not going to happen all the time, but some months, one currency pair, it's going to be very, very good to be traded. And we just need, if you put it in numbers perspective, numeric perspective, you just need a handful of trades when you trade manual, okay, based on this strategy. Just need a handful of trades to make some good returns. So on this particular one here, the price was in a downtrend on the weekly chart, which it's rare to see the weekly chart in a definable trend. Okay, it's not something that we see very often. And we marked out this gap here. Okay, and we said last week the price was here. We didn't know for this one. We said that the price this week might gonna move a little bit more upwards to get well into this gap. And if on the 4-hour time frame, the price will experience some kind of reversal price action, so we're going to go now to the 4-hour chart, we can take opportunities to sell this one. So where is Monday? Let's put Monday, Friday up. So Monday is, come on, Monday is here. So on Monday, do you guys see my screen? On Monday, the price gapped up and moved upward, and it came until the area of resistance we marked. Okay, at this point here, the price printed this reversal price action pattern here, this one, the reversal. So, and that started at 8 a.m., which is the, I think that time the France or German stock market opens. Anyway, it was during the European trading session. So we could have placed, let's say, a sell stop order here or to take a trade within this candle, whatever. Our stop loss to be above this area, entry point here, and just go for 2 to 1, 3 to 1. This one was 3 to 1 trade. Okay, simple. Then on Friday, this trade, it took few days. Okay, on Friday, the price, prior Friday, the price moved upwards. Again, green, 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 green. Why we are looking to go short? Why we are looking to sell this market here? Not because of something we see here, but because of something we identify on the weekly time frame. We come to the 4-hour time frame knowing what we are looking to do. Is like the grocery shop. You go, you leave the house knowing what you want to buy from the grocery shop. Regardless that most of the times we go to the grocery shop and we just buy things. But when you have a plan, when you have a trading plan, or when you have a grocery list, you make the list where? Most likely at home, looking what's missing, and then you go to the grocery shop and you are going directly to buy the items that you are looking for. You don't go to the grocery shop to look and think, what do I miss at home? Same with the 4-hour chart. The 4-hour chart, it's the grocery shop. Okay, so remember that always. The 4-hour chart is equals grocery shop. GRS. Okay, simple. The house, the weekly chart equals the house. So we make the checklist of what's missing in the house, and we go to the 4-hour chart, or we go to the grocery shop to buy the things. So on this one here, the price, actually it was this trend here. Also the price made this higher high and higher low, and then we captured it with a trend line, upward trend line, and then the price broke below the trend line. And this is the first sign that, hey, this uptrend now ended. It came to an end. It's not valid anymore. So what are we looking for? We are looking to go short. We are looking to sell. And how we are looking to sell? With a strong reversal price action pattern that I teach you from the first day on this webinar. It's going to be either with a bearish engulfing like this one here. It's a combination of two candlesticks, or with a bullish, or with a bearish shooting star that it has a long upper wick. And this one here, I think it was 2 to 1. That, okay, 4 to 1. It was a bit larger. Okay, so simple stuff, guys. Very simple stuff. We want to trade something that it's simple, not complicated. And when you are trading trends, when you're focusing on trading the trends, always you're going to see the price move fast in your favor, in the direction, because the trend moves faster than the market, that like this one here. Okay, that was the one setup. On the Euro Canadian dollar, we spoke about that also on the webinar. We looked at the weekly chart. We saw this reversal price action at support, weekly reversal price action at support. It means that most likely next week at some point we're going to see the price rally. On the 4-hour chart, Monday was here. Okay, so the price was moving like this. On Monday, the price made this higher high. You see, this high here at point A is higher than the high at point A plus. So we are looking to buy. There were few opportunities. The first, it was this bullish engulfing here. The second, it was this bullish engulfing there. And that was a 2 to 1 trade. The price moved higher than the target, but it's okay. I mean, even you go for 2 to 1, what do I mean by 2 to 1? It means I risk, let's say, $10 to make $20, or it is $100 to make $200. Okay, so next week, this market, it looks like that it has a resistance up here, so maybe we're going to see more continuation. Another one we spoke last week, and it has a nice reversal this week, is the Euro New Zealand dollar. The price came up to this resistance, rejected on the 4-hour chart. Remember that I draw you this upward trend line, and what did I say? When the price breaks below the trend line, then we're going to be in, we're going to look to go short. And that happened on Friday, so we didn't take any trades here. But from this week, we're going to look for the price to continue moving lower like this, and hopefully to find these reversal price action signals after some point, or this bearish engulfing maybe somewhere here, and to go short and go for 2 to 1 or even 3 to 1, depends. Next one, Euro Australian dollar, another great setup on the euro last week. We had these Fibonacci levels here on the weekly chart. Very quickly, the price makes lower highs and lower lows, and we wanted to continue look for shorts. Why not? So the price came on Monday, I think so it was on Monday, this one, on Tuesday, sorry. On Tuesday, the price towards the end of the Sydney session, it created this reversal price action here, like a shooting star, long upper wick. I don't care about the name. I just care to see that the price got rejected because I see this long upper wick. And then, don't know. And then the price just kept moving lower. Guys, any questions? Zeba said, hi, Theo, I need... okay. Zeba, yeah, I see that it's a bit, sorry, because it's not relevant to market analysis, but it has to do with wallets and Bitcoins and Ethereum, all this stuff. I will definitely suggest you to find me on Telegram and just send me a message so I can help you with an answer, okay? It's Theo Theodoro, I don't know. Guys, can you check if you can find me on Telegram like this? Because if I tell you to, if you try to find me and you cannot find me, it's been a while to check how my name appears because I changed it a few times there. So just check if you can find me. Zeba, send me a message and I will try to help you with this question about cryptos and all this stuff. Okay. So let's continue. Pound Canadian dollar. Guys, do you remember we marked this, actually, this purple line zigzag? I made it last week before Monday. We didn't have this information here. And I remember I told you because on the weekly chart, we had this reversal price action here from Monday onwards. It means last week we were expecting the price to continue moving upwards, okay? And on the 4-hour chart, I said, because the price was in this downtrend and now it starts consolidating, better to wait for the price to break outside of this consolidation. And that happened on Tuesday. And then we had a reversal price action, bullish engulfing right at this new support form here, the one I put on the circle. Bullish engulfing, we could enter there, a stop loss below there, and just go for 2 to 1 or whatever. Okay. This is how we trade manually. We keep simple things. If you really want to learn, just try to stick with the webinars. If you have some questions, perhaps you can send me some messages and I'll try to help you. However, it's more convenience for you guys. Okay, from this week now, if the price continue moves upwards and start putting some bearish candle, black color candle, we can use this area of support here to pick up some long positions and to target this level here. Now, for example, for some friends that they are for some traders that they are experts or they are very familiar with fair value prices or fair value gaps. This fair value gap here, I mean, how could you validate it to place a limit order here to go short? Okay, it will have been a little bit risky. I'm going to host a webinar actually. Now I remember about the title of the webinar with that prop firm, and it's going to be how to trade the sessions overlap from New York to Sydney, from Sydney to London, from Asia to London, from London to New York, and again, New York to Asian session, not to Sydney session. And this involves a lot of how to validate a fair value price. Or I don't like to call them fair value gaps because the market is not gapping. The gap is when the market make a price gap. This is the fair value price where the price is it's going to respect that there is a value here. That's why we call it fair value price. Okay. So from this one, still bullish. Australian dollar, Canadian dollar. Another one was very promising last week. It was this one because we said the price didn't decline from this resistance after 3 weeks in a row with long upper wicks, and then we finally had a bullish candle last week, and we said from next week onwards we will look for long positions. On the 4-hour chart, if you were looking a couple of times a day, the 4-hour chart, this one here, it was a small bullish engulfing to go long, and another one, it was this one, but I wouldn't take that one. I wouldn't take this one. Only the small one here, which it was follow after black candles. Some questions. Yes, of course. Why you cannot find me? Just allow me 1 second to check how is my name on Telegram. Is it? Just 1 second, guys. Yeah, this is my here is my username. Okay, 1 second. Copy username. Okay, guys, I found me. Okay, this is my username. Okay, guys, if you have any questions, honestly, I'm full-time with trading. I'm here to help you, to support you. If you need anything, either send me questions directly or send them to George at support, and then he will direct the questions. Either way, it's fine. Okay, we are a team here. So just as you prefer better. How do you know where to start the trend line and support line? Okay, that's a great question. I think I have on my YouTube channel some videos about this, some tutorials. I have to check. But yeah, it's a little bit of educational stuff that now I don't have the time to show you. I will do it next time. But that bullish engulfing is not at the support resistance. It is validated as well. Why? Yes, it's at the support area. It's an intraday support. Okay, it's this one here. And also an inside intraday support is this one there. So it's a very valid one. Okay. All right. Oh, Zeba. Oh, none of these guys. Guys, apparently it's something wrong with my Telegram channel. Try to put Theo Theodoro without space, and let's see what's going to happen. Thank you for the screenshot. Yeah, so far none of these are my accounts. Now I understand why nobody can contact me because now you cannot find me there. Okay. How do you know support or resistance is valid? Guys, I have to teach you about this. It's honestly, there are specific things we use. There are rules that we use on support and resistance, and I will try to do it next time. Just remind me early. Next one, New Zealand Canadian dollar. It's one we're going to keep an eye on. Next week. Lucky those they are still on the webinar. Guys, next week, Reserve Bank of New Zealand will report interest rates. They expect to keep them at 5.5%. That's the current rate, 5.5%. If I don't believe they're going to increase the interest rates because now all the major central banks, they are trying to decrease them, okay? But in case they're going to leave them unchanged, we're going to have it's going to favorable a little bit the Kiwi at some point, but the weekly chart on the Kiwi Canadian dollar has a bullish, very bullish, strong candle, and the 4-hour time frame just turned. Look at this. We had this trend line drawn from last time, and last week the market changed only on Friday. So now we are at the beginning of the uptrend. At some point, the price will put some black candles, and then we're going to see some kind of reversal price action. This can lead us to a new trade to go long. Okay, mark this on your chart. Remember, New Zealand Canadian dollar. If the Reserve Bank of New Zealand will not decrease the interest rate, and if the market also will follow through, then we most likely going to see some sort of reaction here. And I think that's all for today. Yeah, we cover everything. And Bitcoin. So on the weekly chart, guys, Bitcoin is selling off. And this is actually the analysis I will send on Monday. Let me show you for those who maybe are interested a little bit. So I use a couple of moving averages because we need some validations. And there is the 50% Fibonacci area here, can be used as resistance. The market so far respected it. If the price will remain below the 50 and the 200 moving average, we expect it to continue to move downwards. The previous week's low, though, it's going to be used as the first relevant strong support in the market, especially if we are trading intraday. But if the price is going to move upwards, we have a bearish engulfing order block here that can be used as an opportunity to go short, for example, okay, or to sell. So pretty much that's the analysis. It's a bit more detailed, but in a nutshell, it's like this. And it's supported by some oscillators like the RSI and the stochastic. And the last one for someone that asked, the pound Canadian dollar, pound CAD. Price moves upwards, price makes higher highs and higher lows. So another one that we marked, did we? I think we spoke about this. Yeah. Yep. So if the price continue moving upwards, I see the next resistance up here. Now, how to enter is price makes higher highs. At some point, it's going to make a lower. It's going to lower, so we can pick up some trades. Maybe the price is going to come around here to pick up some trades and go long. Well done, Zeba. You have a buy on the New Zealand Canadian dollar. It just depends where your stop loss is, because you know the markets, they move up and down, and at some point they can just how do you say, they're going to retrace, and yeah, when they retrace, it's a little bit, guys, I will send you, I think it's easier to do it that way. On the chat, if you are looking to find me on the Telegram, that's how my username it appears. Okay, so my WhatsApp, it's up there, and then the username, it's Theodoro. Yep. So try to use that one. Okay. or there is a copy link here, copy share link. Okay, maybe this will help you. Maybe this will help you. Try this one. Yeah, maybe I will show you like this next time. So anyhow, just send a message to Gilles if you cannot find me, and it's all good. So myself and the whole Elevating Forex team would like to, we should have a fantastic week ahead, guys. Stay safe, happy trading, and trade carefully. You don't need to overtrade. If you are not sure about something, just remember that always it's going to be another trading day. All the time it's going to be something else. Okay, so have a great night, and I will see you all again next Sunday at the same time. Thank you so much. Good night, everyone.